tell me more about what the conversation was when it came to climate change and these CEOs.
Yeah, this was clearly from this conference an industry that is very much feeling the pressure. And the conversation that they're having is about defining their long-term role in the energy mix. They do so well in the oil and gas business with these high returns, and people are wondering whether they should move into renewables or lower returns businesses. But some investors are saying, hey, that's not your specialty, and you should stick to your knitting. And so oil company executives are really going to have to make the case that they can move forward in the energy mix.
What I also found interesting is that Bloomberg had a chart that showed the portion of big oil capex that actually is compatible with the 2-degree scenario for the Paris Climate Accords, and how much of that doesn't work. And about 17% of BP's capex doesn't work, but Exxon's like 36%. So there's a huge discrepancy here among the big players.
That's absolutely right. And there seems to be sort of a transatlantic divide on that. European companies, you see companies like Shell that are going majorly into power. They're talking about only sustaining their oil and gas production and making power as much as a third of their business. Whereas the U.S. majors are kind of saying, hey, we specialize in oil and gas and that's what we're going to do. And Exxon will increase its capex in that area. And so investors have very mixed views on those different strategies.